Hello, I am Addison Morse with the Women's Cannabis Chamber of Commerce, and this is Cannabis ClipNotes with Judith Dar. Judith has over 20 years of experience in financial management, comprehensive financial reporting, and financial planning. Her expertise includes cash flow management, cost analysis, and treasury activities. Judith is a DOPE CFO certified advisor working with cannabis companies to navigate 280E and cannabis accounting requirements to ensure her clients' businesses maintain financial health and stability. So, Judith, what do cannabis businesses that are plant touching need
Mm-hmm.
to know about 280E and 2024 taxes?
Okay. So thank you, Addison, for that warm introduction. I am thrilled to be here with the Women's Cannabis Chambers of Commerce today. Um, Before I answer your question, I want to just give a brief overview on Section 280E and how it pertains to the cannabis industry. So basically, 280E is a section of the Internal Revenue Code that prohibits all businesses that are involved in the trafficking of Schedule 1 or 2 drugs from taking ordinary business expenses like rent, payroll, marketing, etc. So, because cannabis businesses are still classified as Schedule 1 as of today, for tax year 2024, 280E still applies. So the impact of 280E for cannabis businesses that are plant touching is that they are going to face a higher tax burden in 2024 because they are only allowed to deduct the cost of goods sold under Section 280E. This results in cannabis businesses paying taxes on gross income instead of net income, like most other businesses do. And this significantly reduces profitability. It also causes financial strains for the businesses with increasing costs and limited deductions. Um, Cash flows for cannabis businesses becomes really tighter. Um, and so 280E is here, and it's definitely causing huge impacts, right? So we want to discuss um, how can cannabis businesses maximize their deductions with the 280E limitations. There is another section of the Internal Revenue Code, Section 471, that specifies the accounting for inventory. And because inventory is a return on capital, this is a way for cannabis businesses to kind of um, deduct the expenses that are normally not allowed. But in order for them to do that, they need to make sure that these costs are first flowing through inventory, and then they land in cost of goods sold when the inventory is sold. So when we talk about strategies that they can use to maximize the deductions, like step number one is to make sure that you have the proper financial solution in place that is fully versed in all things 280E and Section 471, um, so that they can be certain that they are taking the proper cost and allocating it out, and ensuring that it flows through to your cost of goods sold. So if you don't have one in place, or if you're currently looking for a financial solution, feel free to contact Dope CFO certified advisors, and we can provide you with a solution. Once you have that in place, you want to make sure that there's accurate cost segregation. That means that you're doing your gap and your cost accounting correctly, because those two needs to be done in order for you to be able to properly take the full deduction. You want to make sure that your inventory management is meticulous. You should have detailed records relating to all expenses and make sure that you have support for all things you have flowing through your cost of goods sold deductions. Um, we do this by maintaining a perpetual data room. I think all businesses should have it, but it's especially crucial for cannabis businesses um, these because they're typically not entitled to the ordinary business deductions. Um, let's see. So, um,
So, what happens when a plant touching business
uh-huh.
employs a bookkeeper or an accountant, perhaps someone that they've used prior to cannabis,
Mm-hmm.
as opposed to a certified cannabis accountant? Uh, is that an easy? I would not think that that would be an easy transition for an accountant that has no knowledge about 280E or about 280E. So, what happens if you don't have the right accountant? What's the consequences?
Well, it could increase your likelihood of an IRS audit, right? Um, the industry as a whole is under increased scrutiny just due to the fact that cannabis is still illegal at the federal level. So just being in the business of selling controlled substances is going to put you on the radar of the IRS. In addition, the likelihood of a normal, I don't want to say a normal, but a bookkeeper that is not educated on cannabis accounting, they're likely to take deductions that are disallowed, which also puts you in the crosshairs of the IRS and leads to audit. Um, the other thing that the IRS looks for is the difference between your gross income and your taxable income, right? Because you are not allowed to take ordinary business expenses, um, you would think that your gross income and your taxable income would be pretty much the same, right? So if your bookkeeper or your accountant is putting everything into or taking deductions for expenses that they're not supposed to, it also leads to you having a lower effective tax rate, which also puts you on the radar of the IRS. So it is important to have an accountant that is well versed in all things cannabis to make sure that it's not costing you costly mistakes. And we're currently in Q4, right? So we're almost at the end of the year. Cannabis owners should be doing strategizing with their CPAs to make sure that they're preparing for the upcoming tax year, right? You want to make sure um, that you are doing your cost accounting correctly. You want to make sure that you're doing your accrual accounting correctly as well, because if you're not, then you're unable to take these deductions. You're not allowed to start um, in January of 2025 saying, let me catch up with all of my cost accounting for the year, right? This is um, um, monthly accounting that's supposed to be done throughout the year for you to take the full benefit of the deductions through cost of goods sold. Um,
So, what are the what can be the consequences of being audited?
Well, if you're audited and it comes back that you underpaid your taxes, right, you're going to be subject to penalties for underpayment. Then they're going to charge you interest for late payment. And so it's just unnecessary costs for the business. The tax rate is already high, but you're going to be paying even higher taxes. And with cash flows being so tight, you want to try to do you want to try to make sure that you're doing everything correctly so that you're not taking on unnecessary expenses. Um,
So can the process of being audited, can
mm.
that affect say a dispensary? Can that affect their license?
Well, you know that the industry is highly regulated, and you don't want to do anything that's going to put you in any type of situation where you're not being compliant, because these are all things that can potentially risk you losing your license. Yeah.
So what is the biggest mistake
Hmm.
the cannabis companies make in regards to accounting?
I think the biggest mistake is um, not understanding the complexities that go along with accounting for cannabis, and failing to realize the importance of bringing in someone specific to the industry. You know, those, you know, a lot of companies I see, they're just say, "Oh, I have a bookkeeper." Bookkeeping is just the debits and the credits, right? But are they actually doing the accounting for it correctly? Because just because you book the debit and the credit doesn't mean that it's following the rules, right? Um, and also, um, I'm sorry, I just lost my train of thought real quick. Um, oh, some of the biggest mistakes you said, sorry. Yeah, so it's not being organized, not hiring, not bringing in the correct financial solutions to make sure that you're doing things correctly. It's not maintaining accurate financial records. It's really important that you have support for everything that you're pushing through cost of goods sold, because the IRS is going to want that if they come out for an audit. So I think it starts from the beginning, right? When you're building out your team, you need to incorporate that into your core foundation, because it's easier to set things up and do them correctly from the start than to have to go back and fix it. The other part is that, the IRS can go back up to 3 years, right? So all it takes is one error for them to open up an audit, and it can open up a whole can of worms. So I think the other mistake I would say is trying to beat 280E instead
Hmm.
of just trying to do 280E correctly, right? The energy that is going into trying to beat it should be placed into trying to build your brand, expand your market, get a prime location, right? These are things that's going to add value to the company, versus trying to beat 280E, which could potentially put you at risk of getting audited by the IRS, and if it's not done correctly, subjecting you to all kinds of tax penalties and interest and fines.
So at what point do you think a business should bring in an accountant? Is this part of their startup? Do you bring in the accountant at startup, or do you start it up at a year later go, oh,
You should be bringing on your accountant pre-revenue. Once you, even before you even obtain your license, once you start um, um, once you start getting expenses for the business, right, you should start consulting at the very least to make sure that one, your perpetual data room should be set up from the start of your business, right? Because it's it's important that you have everything nicely organized and buttoned up so that you're always ready. And when I say always ready, it means you're always ready, whether it's for capital raise, whether you want to be capital raise, whether you're trying to do an audit, whether it be a audit with the IRS or with the state, or an audit on a federal level. You want to make sure that it prepares you for if you like, lenders and making sure, like with banks, if there's certain reporting requirements that you need to meet, having your perpetual data room up, running, and always up to date, it adds so much value to your business.
Well, I think that's all really great information, but it's
Hmm.
also the tip of the iceberg, isn't it?
It
So,
really is.
so we're going to do Cannabis Clip Notes with Judith Dar as a continual series talking about the points of 280E and
Hmm.
taxes. So if you have any questions, direct them to Judith. All her information is on her LinkedIn profile. And that was just great. We're looking forward to doing this entire series. Thank you so much for all the information that you brought and all the questions that that information is opening up. Again, you can find her on LinkedIn. Thank you.
Thank you. Thank you for the opportunity to share these insights, Addison. I hope this provides cannabis business owners with the tools to navigate the complexities of 280E as they approach 2024 tax year.
And as I said, they can call you. Your email's on LinkedIn. Thank you all again.